Morning, Market Chameleons. Thanks for joining us for another pre-market show. How are you doing, Dima?
Good morning, Will. How are you?
Great.
Good morning, everybody. Thanks for joining us. So today, I think we're going to start out with just putting the disclaimer up really quick, Will, before we get started. So before we get started, everybody keep in mind, Will and I and Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your registered investment advisor or call your broker. They should be able to help you out with your questions or provide you with guidance. So there's the disclaimer. And I think with that, we could get started. So what I wanted to do today, Will, was, we'll go over some of the usual stuff that we do with the pre-market, maybe earnings, but I have been getting some questions in the emails that I wanted to go over. They're really pretty good questions. One of them was emailed and then actually was posted also to the forum, so I'd like to address that. And that's where do I find the put call ratio in SPY? So let's go over that. I also had a question yesterday, which was a pretty good question: how to play a dividend play, actually, instead of earnings. How to use a dividend, ex-dividend, as an anchor to play around an ex-dividend. Buying, is it worth trying to buy before the ex-dividend, holding it, selling it prior to the ex-dividend, or holding it through? Like how would we look at it from a historical perspective? What tended to work best? So if I can get to all of those questions, I'm going to try to, and I'm going to try to speed through some of the stuff that we usually do in the morning. Unless you have questions, I'll slow down and address any questions that are coming up on the chat.
All
right. So if you guys are joining us for the first time today, welcome. This is the pre-market report, and these are stocks that are actively trading in the pre-market hours. We got the most active stocks, biggest percentage gainers, and biggest percentage decliners. You can see that in these three boxes over here. I'm going to start out just to see what's moving in a pre-market and a higher market cap stock. So I'm going to just use my filter over here of market cap above 20 billion. So I see about 6 of them made it to the gainers list, 46 on the decliners. So at least market depth, it's, we're looking at a weaker opening than as far as these bigger market cap stocks are concerned. I do see here one of them, Tesla, down 3.4% right now. Couple of these other ones, I'm just going to kind of skim through them right now. Let's take a look at the unfiltered report really quickly and see what's popping up to the top. So I see SUNW, that's up 364% in the pre-market hours. That's a low cap market cap stock, 19.3 million market cap. I think there's some news on it, and this looks like a solar technology company.
those solars are reacting to what California's proposing, the banning of gasoline cars. So the new sales of all gasoline cars.
Right. So potentially kind of companies that are into that clean energy industry may be benefiting from some of the legislation that could potentially change. So SUNW here, we see there's some news out here. I'm not going to get into the news and interpret it, and I'll let you guys decide, if this jump is warranted. But let's take a look at, just the price action history in SUNW. And I see here that this stock's traded in the last 52 weeks as low as 29 cents, 52-week high, $4.57 in the pre-market. It's already trading above that 52-week high, $5.36. That's up 362%. Here's the pre-market range, $1.27 to $8.30, trading 17.3 million shares. That's compared to a float of 16.5 million. So very, very active on a relative basis in this stock. Here's what the chart looks like in the pre-market hours. So you see a big pop here. It's kind of just holding to this price, VWAP price of $5.16 in the pre-market hours. Longest VWAP bar here, $4.94 to $5.46. on 4.9 million shares. So let's take a look really quickly what the stock tended to do after a large opening gap move to the upside, just to see that the distribution of returns after big opening gaps. So this is looking at the last 3 years, the 12 largest gap moves to the upside in SUNW. So we have the dates over here of the gap move. This is the percentage move from the previous day to the open. So we see here on average that it was 11.1%. So today is like way above anything we've seen in the last 3 years, 362%. We also see that this is what it tended to do after the opening. So half the time it looks like after a big gap move to the opening, half the time the opening price was the high of the day and it drifted lower from there. 50% of the time it went high from the opening to the high of the day. On average, it gained 8.8%. So that's including all these 12. From the open to the low of the day, the average move was 10.4%. From the open to the close of the day, after the opening tended to drift lower more often than higher. So 92% of the time, it finished lower than that opening price for an average loss of 6.9%. Again, this is, a very high move. It's almost like, it was up 50% actually yesterday as well. So interesting, we'll see how that works out, but very low cap stock, not a lot of liquidity. We'll see how that turns out. We could really quickly, because I wanted to get to some of these questions, unless anybody has like specific questions on the pre-market report, I'm going to move on to earnings and then kind of go to that SPY question with the put call ratio.
Sounds good.
All right, so let's take a look at what's coming up on the earnings front. So this is we're going to look at earnings that are coming up in the next 2 weeks. I'm going to filter it for stocks that on average trade at least 5,000 contracts or more per day. And so we see here not that many coming up today after the market close. Costco, COST, that right now that stock is expecting, based on yesterday's closing option prices, the straddle's pricing in a move of up or down 4.5% in either direction. So that's the implied move according to the option straddle. The 4-quarter average move, the actual move up or down on average was 1.1% in the last 4 quarters. In the last 12 quarters, the average move was 2.9%. So we see right now it's pricing in 3.4% above that 4-quarter average and 1.6% above the 12-quarter average. The high move on Costco in the last 12 quarters, actual move 8.6%. So let me see. We could go to Costco, or you know what? If we have time, I'm going to get back to the Costco. Let's just go to the SPY put call ratio, if that's okay.
Sure.
All right. So that's the question came up, and that's in a form, and I got an email at the same time. How do I look up the daily put call ratio, the change in a put call ratio in SPY? So I'm going to go here in SPY, and we'll analyze it from a couple different perspectives. Open interest. We'll take a look at also how many out of the money puts are trading, like crash puts and correction puts. So here, when I go to the open interest, this kind of up top gives us a summary overview. So we see total open interest right now in SPY, 20,272,000 contracts. That's up 0.3% from the previous day. From the 52-week, based on last 52 weeks, that's in the 27th percentile, meaning that 27% of the time in the last 52 weeks, open interest was lower. 73% of the time it was high. It was higher than today's this level. We see in the last 5 days, open interest has decreased by 14%. This is the 52-week average, 22 million. Now, over here, we could, same thing for the call open interest, put open interest. This tells us the put call ratio is 1.6. So if we divide the open interest in the puts divided by the open interest in the calls, 1.6. That declined a little bit yesterday. And right now, that's also in a 15th percentile rank, meaning that 15% of the time in the last 52 weeks, that level was lower. 85% of the time it was higher. So that put call ratio on a relative basis is not that high, basically, as it has been in the last year. In the 52-week average, 1.7. Okay, so let's take a look at, he was asking about the daily. So I'm going to go here to the historical. So this is a day-by-day breakdown in SPY. And here we see what the call open interest and the change, the put open interest and the change. This is the total open interest. So we see total open interest right now, 20,272 contracts. That's up 0.3% from the previous day. The 20-day average, 22.5 million. So we see we're below that 20-day average. Put call ratio 1.6. That's down 0.5%. So on a relative basis, yesterday a little bit more calls than puts. 20-day moving average 1.64. This is where we traded. So I'm just going to go back because he was looking. So let's just say, I'm not going to go all the way back, but let's just say like August 19th. We see here's how the put call ratio is 1.75, 1.6. So as we're moving forward, we see that's been kind of going a little bit. And so see the stock price here, 337, 338, 339, 342. Put call ratio is a little bit higher there. Now that we're at 322, it looks like that put call ratio is coming in. We'll see what happens today, but really quickly, you could download this. He was asked, the question was, can I download this history? So this little download button, you could download it, start analyzing it, internally. But this is a day-to-day put call ratio in SPY where you would get the history and kind of the breakdown in the open interest calls and puts. Let's take a look at the 5-day trend really quickly in the open interest. And I'm going to just look what the open interest would increase the most in the last 5 days on what line in the calls. And let's do the same thing in the puts. So this is the 5-day change here. So October 16 expiration, the 310 call, that in the last 5 days, that the open interest increased by 41,014 contracts to a total of 48,213. So that's on the call side, the biggest open interest gainer on the 5-day in the 5-day period, 310 call. So we're still $10 above that. In the put, the October 14th expiration, 2 days before this, the 265 put. So that's right now way out of the money. The 265 put October 14th, that increased by 60,965 contracts to 61,122. So those are the comparisons, the call and the put on a 5-day change. Let's take a look just on a 1-day change. So from the previous day, so we see here in the call, 357 call, that increased yesterday. Open interest, 32,698 contracts to 35,646. That's on a more long dated option. So that's looking at the December 18th after, so this is going to be after the election, December 18th expiration, 357 call. So that's, more than $30 to the upside. September 25th on the put side, September 25th expiration, that's expiring tomorrow. We're seeing the 320 strike. So right now, if we're opening right at almost at that strike, that increased by 28,424 contracts yesterday to a total of 65,515 contracts in open interest. So that's on a 1-day change. We're comparing, the biggest open interest change in the calls and the puts. I'm just going to really quickly, just to see, I'm going to sort it by where the biggest open interest is in the puts, and biggest open interest is in the calls. So in the calls, the biggest open interest right now in SPY is in the December 18th expiration on the 363 line, 166,678 contracts there. Doesn't look like in the last 5 days much has been happening on that line, but that's where the largest open interest is in SPY in the calls. Largest open interest in the puts right now, I'm actually going out to 2021, March 19th, 2021. So we're already in the next year. It's the 290 put, so about $30 away from the current price. 248,149 contracts in open interest on that line. Again, not much happening, at least in the last 5 days on that specific contract, but that's where the biggest open interest, concentration of open interest is in a put in SPY. Again, you could download these, do your own internal analysis. So what we did was we took, right now we just looked at in aggregate SPY put call ratio, and in aggregate what the open interest is. Then we looked at it by specific contract. You know, I'm just using these sorting tools over here. Now let's take a look at, from the perspective, how much in premium right now is trading in the crash puts. So I'm going to go here, risk premium here. First, let's go to this tab, downside put volume. And in this table over here, we have it divided by correction puts. So these are in SPY, it's looking at the time of the trade, every put, every out of the money put that traded between 10%, more than 10% away from the current price, but not as much as 20%. So between 10 and 20% away from the current price, which would be like a correction from these levels. If it's more than 20% away, we call these already crash puts, where people are just protecting themselves or betting on that the market will really fall like more than 20% from today's levels. So over up here, these are the summary statistics. These are day by day. Over here, let's take a look first at the correction puts. So on the correction puts yesterday, $27,984,000 worth of these puts traded yesterday. That compares to a 20-day moving average of 68 million. So not that much. You know, there's no like crazy panic trading in these puts. We could see also, based on the amount of trades, 7,423 individual trades in these correction puts versus a 20-day moving average of 10,000. Total volume, a little bit less than 100,000 contracts traded versus 20-day average of 232. So if we come down here, we see, I'm just going to go August 12th, we see yesterday, $27 million worth. We see as much as $158 million worth in August 31st, August 28th, $162 million worth. September 3rd, 105 million, 104 million, 101 million September 4th. So on a relative basis, not that much yesterday. Let's take a look at crash puts. So these are puts where, remember, it's 20% or more at the time of the trade, 20% or more from the spot price. So yesterday, $5.2 million in notional value of puts trading that are considered crash, that we consider crash puts. That's compared to a 20-day moving average, 21 million. Also, we see individual trades, 3,572 individual trades in these crash puts versus 20-day moving average, 5,935. Total volume, almost 57,000 contracts traded versus 20-day moving average of 139,000. So nothing crazy yesterday. Nobody's hitting panic buttons right now. Let me just take a look. Since August 12th, I see August 18th, we see here 139 You know, we've seen as high as $139 million worth of crash puts trading. Let me see here. Another one here is like 46 million, 41 million. So we see much higher, you know, than relative to these numbers, much higher than yesterday's 5.2 million. Hopefully, let's do one more. Another thing we could take a look at is the risk premium. How much on a relative basis are these crash puts? So here, I'm going to take a look at a 30-day constant maturity. And let's take a look at the cost of a put that's 10% away from at the money. So I'm going to reload that. So this is what a put with 30 days to maturity and 10% away from at the money. So relative to the stock price right now, it'll cost you about 0.5%, which is below, you can see here, below the 52-week average of 0.7. So and we've seen how high in March, look how high that got. You know, that was actually during the big, that's when the coronavirus hit. So you see it spiked all the way here. It's been steadily climbing here. So on a 52-week average and a relative basis, not, we've been selling off, but you don't see that, that commitment to the downside or that fear right now to the downside as of yet. Let me just really quickly take a look at that crash put 20%. And let's just go a little bit further out. Let's do 90 days after the election. So this is 90 days out, 20% out of the money. So here, like right at the average, right? This dotted line, that's the 52-week average. So we see like we're kind of right at the average, maybe a little bit higher. So 90 days to maturity, it'll cost you in premium 1% relative to the stock price. And it looks like on average, in the last 52 weeks, it was 0.9%. That's really quickly. Premium in the downside, you could do the same thing. Could compare it to the premium to the upside. Or you know what, easier way to do it is looking at the benchmarks. So let's just take a look at the benchmarks here, and I'm going to look at a risk reversal. So this is the cost of buying. So I'm looking at the risk reversal here. Here's the chart. This is the cost of buying a 5% out of the money call, 30 days to maturity, and selling a 5% out of the money put on a 30-day constant maturity. So right now, you would receive a credit of 0.6% relative to the stock price, which is right at the 52-week average. So as far as the skew goes, we're right at that 52-week average. On the 30-day maturity, let's take a look at, on the 60-day maturity, we're right at the 52-week average, 0.8% credit. 90-day maturity, we're actually a little bit below. So that's what the risk reversal looks like, if you were measuring the skew, the upside call relative to the downside put. So try to go really quickly over it. Will, do you have any questions? If not,
we did have a quick question. One of the super interesting chat going on, but one of the new traders, I haven't seen Scott before. He's asking about individual strike put call ratios. Is there anywhere, where's the best place to see what's trading at? Is it the options chain? Where would you recommend going to see what's going on in each line?
Yeah, like just an individual line.
Correct.
Yeah, so you could, if you wanted to do that, like here, let me just try to pick one that has open interest in it. So if you click, I'm just going to do like a random one right now. Let me just make sure that there's like open, here's some open interest here in the 330 call. So if you're just looking at the 330 call, let me see. So I don't think we do like a put call. Really quickly, you could just compare here, like here, the call, the performance on this strike. There's 1,879 open interest on the call. And if I just go to the puts, it's 9,923. So on the same line, this is how you do it. I don't think we've run like an actual put call ratio. Yeah, I don't think we run like a put call ratio per line. So we do it like in aggregate terms. Let me just take a look. You know what? We do run a, so I'm going to go to here to the activity. Here's one thing we could do. You see here, open interest. So I went to the activity on SPY open interest. So this, what this is doing is looking by expiration over here. And here you get a percentage of open interest in the calls versus open interest in the puts. So you see here for September 23rd, that just expired yesterday. Let's go to September 25. Expiration, 41.7% of the open interest is in the calls, 58.3% are in the puts. So I believe if I click on this open interest, so you see how I clicked on that open interest? This gives you a visual open interest in the calls versus open interest in the puts and the lines. So you see here the 320 line here, that's the bar in the 320 line in the puts versus the calls. So you could visually actually see, the relative open interest puts and calls. And here, what this is saying is 8.3%. This is saying that the open interest here would represent, if all of these were exercised, would represent 8.3% of the average daily stock volume. All right, so that's how much open interest is on that line. So think of it as like 8.3% of all just the stock volume trading. That's what this would represent. And the open interest in the calls here 6%. But this would be a really quick way to look at a visual on this bar. So let's just take a look here. Let's take a look at this one, 3.5 million on October 16th. So this is going to be the October 16th expiration. So we see a big open interest here on the 350 call. That represents 18.2% of the average daily option volume, stock volume, if all these were exercised. And on the put, there's one way out here, 260 strike put, represents 15.5% of the average daily stock volume. Here's another one, the 310 put, that's representing 15.2% of the average daily stock volume in SPY. So that's a really quick visual way to actually spot, big open interest in calls and puts, within the expiration. And this one will be it'll start out by expiration. Let me just take a look real quick. I think we're running up against time, so I didn't get to the cusk or the dividends, but hopefully this helps out that question.
That's fine. I did have a Chameleon shared something with me today. I don't know, D, do you mind if I bring it up real quick? It was
from the forum. Sure. Yeah.
Let me see if I can do this. This was from Jake, also known as the PhD Chameleon or Dr. Chameleon. He's been very active in the forum. I recommend everyone go to the forum, but he has this sheet he used, and it reminded, when he sent it to me, it reminded, you were talking about Jesse Livermore the other day, I think, Distance of a Stock Operator, and how he used to take notes. Well, this is how Jake takes notes on his options positions. So he shared it with me and said I could share it with the Chameleon. So if anyone out there wants a copy of this, just email me directly, williammcbride@gmail.com. I'll put it in the chat. He was nice enough to share it, and a lot of people have read it. So it's an interesting piece, and it's a good way to take notes and go back and look at your winners and your losers and continue to learn.
For definitely, if part of trading is you want to be organized. You want to have you want to organize your information. You want to be able to visually see and clearly state what's your reasoning behind the trades, and you want to learn from it. Then because your initial trades are based on assumptions, right? Then once you put on that risk and you have a feedback loop, because after the trade, you're going to get you're going to have positive, negative returns, and that's your feedback loop to start correcting yourself and tweaking your own trading signals going forward. So you do want to have a system where you're organized and you have, you could document and clearly identify why you're entering the trade, right? This way, that's how you could start building your models and your trading signals. Otherwise, you're just acting on impulse and and intuition, but we know how that works out in the long term.
Not well.
Yeah. So
and I think the
nice.
big deal is using the forum. It's super helpful. And we don't get to all the questions ever on the show because there's so many. So please put those questions in the forum and we'll try to get to them there. Yep.
So, I guess the bell's about to ring. I'm going to try to cover the other question tomorrow on, how to look at stocks and look at dividend plays in the stock. I'm going to try to cover that one tomorrow.
Excellent. Thanks for joining us, Chameleons. You have a safe trading day. Thanks, D.
Thanks, everyone. Have a great day.
Be safe.